my sincere apologies for being late today. I was just on a Bloomberg Ashrak interview, and the interview, despite assuring me that the interview would finish at 1:30, it ran over, and I couldn't just jump out of the webinar because I was I was online on international television. So my sincere apologies. It has been a very stressful few minutes, because the last thing I wanted to do was to keep you all waiting. So sincere apologies to everybody: Jabin, Mohammed, Selva, Warren, Zahir. I'm sorry that I've had to keep you waiting, and thank you for your patience. I will endeavour to make it up to you, and we're going to look at some pretty interesting things during this webinar. Don't forget the normal disclaimer is that as I'm talking about different entries, different exits, remember that this is all from a educational perspective, and the idea is that as you look over my shoulder, someone with a professional trading background, you get to see how I make decisions and how I go about understanding different currencies and commodities. But please remember that this isn't trading advice. Those of you who are regular, you understand this. Those of you who are just coming for the first time, I'll just briefly show you the disclaimer as I get myself together, and remind ourselves that the key thing we're trying to do when we're currency trading is trade strength against weakness. That's what we're always trying to do. And I'm going to show you a good example of that today, because we have had a good example. We will also go through the Reserve Bank of Australia meeting, and we will also go through the Bank of England meeting, which is due tomorrow, 12 o'clock London time. So I'm really glad you could join me. You can see I've got Bitcoin prices up because I was speaking to Bloomberg Ashrak on Bitcoin, and I just wanted to see what the prices were at the time. Very good. Okay, well, let's get stuck into the session. Well, first of all, we can say that risk sentiment has been broadly quite mixed today. We've seen strength in the Aussie and the New Zealand dollar, and we had been seeing weakness in the yen. That strength's coming back in, and we've seen a mixed picture in the Swiss franc and a little bit of weakness in the US dollar. Now, I'm just going to go through the New Zealand dollar. There's been specific reasons for strength in the New Zealand dollar. I just want to run that through with you, exactly what those reasons are. And if we go into this terminal here, we can see what the latest news is out of New Zealand employment data. Now, there was an excellent print from employment data in New Zealand overnight. It was 4% versus 4.5%. So that means far fewer people are unemployed, which is excellent for New Zealand. In fact, the employment data was so good, you can see job growth has come in at 1%. And as a result of this employment data, now remember, this good news had been building for New Zealand. They tapered bond purchases, in other words, borrowing less money, which is a good thing. That ended on the 23rd of July. On top of tapering bond purchases, remember the Reserve Bank of New Zealand had been seeing very strong inflation. So their last inflation print was plus 3.3%, and that is the highest that there's been for 19 quarters. So, you know, good news have been building for New Zealand for a while. This just tops it off. You remember, wages and jobs is the driver to a country's growth, and with the labour market strong, this led to some very interesting analysis. And the largest investment banks, ANZ, ASB, BNZ in New Zealand, have now increased their expectations for the Reserve Bank of New Zealand to raise its cash rate to 1% by the end of the year. So there are some significant series of rate hikes are expected. This is what was really boosting the New Zealand dollar. So this means on an intraday basis, we really like the idea of buying the New Zealand dollar today. Now, we like the idea of buying the New Zealand dollar, and there's a couple of options we have. We can buy the New Zealand dollar against the Japanese yen here, and that's possible to buy at market over the medium term. So you can buy at market, stocks below 75, looking for a move up to 79. That's a trade I'm in, but I'm in it from lower down. The risk with this is that we've been seeing quite a lot of yen strength this week. on worry and risk and concern. And so the risk is that we see yen strength come back in and the pair moves sideways or even possibly moves lower, back below that 75 handle. So another alternative is looking at something like the euro New Zealand dollar pair, because the euro has got a weak bearish outlook, and we can and the ECB are expected to be a little bit more dovish, with Christine Lagarde hinting that she's been hinting that the PEP emergency bond purchase program could be expanded into the everyday asset purchase program, which is essentially a more bearish outlook. So any retracements on a medium-term basis back up to that 200 exponential moving average, up to that 1.16900 region, is suitable for going short. Okay, so any retracements higher is suitable for going short. Seen a little bit of profit taking into that support area. There is another trend line which is extending out across the lows here. So just moving lower is a is on that New Zealand dollar strength. And over the next few weeks, we would expect this pair to drift lower. Now, we don't necessarily want to sell it at market because we'll have stops above that 1.7100, and that's quite tricky. But moving back up to that trend line, we can have our stops above that 1.7100 region and look for a move lower. So euro New Zealand dollar sellers now make sense. Expectations are for the RBNZ to hike interest rates in August. So in a couple of weeks' time, the first hike's coming. Expect New Zealand dollar strength. Okay, so that's one strong currency we can expect going into the RBNZ meeting. Now, another currency for us to be looking at was the Reserve Bank of Australia. They met this week, and we were expecting the RBA to be more dovish. But in the end, they were quite optimistic. They were focusing on the economic recovery. They were focused on vaccination of Australians, even though they've only vaccinated around 15% of their population. And the hopes of the economic recovery meant that the RBA didn't expand that asset purchase program, as some had expected. They didn't cancel their bond tapering program either. So we did see some Australian dollar strength out of the Reserve Bank of Australia meeting. Now, it was possible to trade that short term, but medium term was still neutral, the Australian dollar. Australian dollar has a number of different factors weighing on it. First of all, let me show you this. And remember, this is iron ore prices. See how quickly they fell? They fell so quickly because China said that they were going to be limiting their steel production. Now, steel production is a big producer of carbon emissions and greenhouse gases. Around 15% of China's total carbon emissions come from its steel production. So therefore, when China says they're going to cut down their steel production to limit their carbon emissions, that has meant that iron ore was less likely to be in demand, so it fell. Now, the reason that's important for Australia is Australia exports 25% of their entire exports is iron ore, and 80% of that 25% goes directly to China. So weak iron ore would weigh on the Australian dollar. Okay, so we just need to be aware that if China's slowing down its growth, if iron ore prices are falling, if the Delta variant is struggling, is rising in Australia, then we would expect the Australian dollar to be more weak. So I have a neutral bias on the Australian dollar. So even though Reserve Bank of Australia weren't as dovish as expected, and remember, I was selling the Aussie CAD and the Aussie New Zealand dollar into the meeting, I had a good amount of profit heading into the meeting. And then when the RBA made that shift, I closed my positions because that bias to sell the Aussie CAD and the Aussie New Zealand dollar were no longer there. However, the bias to sell the Aussie New Zealand dollar is back again because of how bullish the RBNZ expected to be. But I don't like selling here because you see we're in that key support. So don't sell here. That's a key support level. But the options to sell are up at that 1.0600, or if that level breaks, look to sell again at that 1.0400 region being tested. So that's the things to look at for the Aussie New Zealand dollar. It's not worth selling here now. Remember, you don't want to sell at lows. You don't want to buy at highs. you want to be looking for technical pullbacks in price. Now, big focus tomorrow is the Bank of England. Now, the Bank of England have been very, very kind of neutral with their last couple of interest rate meetings. So let's just have a little look. Let's just show you the pound. I'll show you a couple of options that I'm looking at for the pound. So at their June meeting, the Bank of England did revise growth up, they did revise inflations up, but yet we still saw the pound being pretty flat. There wasn't really a hawkish reaction to the pound. Now tomorrow, what will the Bank of England do? Now this is how it looks. The most hawkish member used to be Andy Haldane of the Monetary Policy Committee. He's left now. But commentary from two members, Saunders and Ramsden, has been bullish. So we are expecting Saunders and Ramsden to replace Andy Haldane. So that should mean two people should be voting for a more hawkish response tomorrow. So the vote should be 6-2 to keeping the quantitative easing asset purchase program on schedule. Now, if we see a 5-3 split in the vote, so if the vote splits and people see reasons to taper bond purchases early, or maybe even bring forward interest rate hikes, expect the pound to gain. Pound yen upside looks good, euro pound short looks good. So if there's a bullish surprise from the Bank of England, expect pound strength. Now I think the risk is asymmetric. In other words, what I mean, I think if the BOE is bullish, I expect the pound should fly. If they're neutral, they should be neutral with a positive tone, so I expect a more flat action in the pound. So one way of expressing that is possibly against the pound yen. Remember the difficulty we've got with yen pairs at the moment. We have been seeing some risk off trading. Now pound yen's been pretty strong. You can see that despite the risk off trading we've been having, the pound yen has still been fairly robust, and this strong pin bar rejection on a Bank of England that should be opening up the economy with the vaccination rate going very well in the UK and the economy opening up, COVID-19 cases even dropping. Look, I favour this to break higher, and the entries on a break would be market, move above that simple trend line, move above that trend line, ultimately targeting 160. That's what I like in the pound yen. Looks very attractive, and there's a lot of upside potential. If we do see this trend line break, I think that's a good indication that we'll be heading up higher, and certainly for a retest of that 155 region. Now, a lot of this is going to pin on the Bank of England. So an asymmetric risk. If the Bank of England are hawkish, great, expect this to move higher. The only problem is the yen. So if we want to avoid a pair with without the yen, then a euro pound short makes sense. So another option, if we just look at the euro pound, we can see here that selling the euro pound at market could be another excellent strategy going into the event. Now remember, we've had a look at the let's just look at this. We've had a look at the Eurozone, and we're expecting them to be more dovish, okay? So we are expecting this euro pound pair to break lower. A more dovish, a more hawkish Bank of England tomorrow with a 5-3 split or asset purchase, expect this to break, okay? So look for this to break. And I said the risk is asymmetric. So remember, I think there's a greater chance of a more volatile move to the downside than there is to the upside. Obviously, the Bank of England, if they were bearish, you would see a strong reaction, but I think that's very unlikely. The situation in the UK is good. Vaccinations rates going well. COVID-19 cases are pretty depressed, considering how many people are actually testing positive for COVID-19. Hospitalizations, obviously, every single hospitalization and death is sad, but it's all within kind of tolerable levels when we're looking at from a broad and wide economic question. For each case is obviously tragic from a personal point of view, and you know, it's a terrible thing. But from an economical point of view, with the whole nation, it's acceptable for the UK to maintain their reopening policy and winding back COVID-19 restrictions. So euro pound short, do you see this trend line, a break of that trend line, stay below and expect sellers to be in charge. Okay, first target would be down to this 0.8300 region. So that's a key thing. Now, the other key data we obviously got is the US ADP data, and we have Fed's Clarida speaking today. Now, that's going to be very interesting for gold and the ISM manufacturing data. So look at those 10-year yields, they're dropping lower. So just run through gold, help get your head around this. You see, when the dollar drops and real yields fall, that's what gives gold that real boost to the upside. So you can see when real yields fall, gold rises. When real yields fall, gold rises. But you need to have the dollar and real yields falling together. See, at the moment, what we've had quite strangely has been real yields falling, but gold hasn't been shooting higher like it did in May and like it did around the turn of the year, December time. That's because real yields and the dollar need to be both moving in the same direction. If we see the dollar weakening, expect gold to absolutely fly higher. So at the moment, those 10-year yields pushing down beneath that 1.130 level, that's really significant. And that is why we've been seeing gold just pushing up a little bit higher up towards that 1830 region. And we can see that the dollar has been weakening. Okay, so if that dollar keeps weakening, breaks through that 9150 region. So in other words, what we're looking for is weak PMI data. Look for that weak PMI data and gold could really surge higher. So that's something to be looking out for. I am long gold, mainly because of the technicals were very, very nice on gold. And just when price pulled back down to that 1810, 1813 region, I went long. So I'm sitting nicely in profit, but I want to see this go next target to 1860, 1900. As I said, more speculative, just the technicals really good. Remember, the seasonals for gold are fantastic in August. And that's mainly due to Diwali and the Asian wedding season sees a lot of gold gifts being given. Remember, in the Near East, much more traditional to give gold gifts. That's because gold is a store of value, and it's also not only a kind gift to give to a young couple getting married and showing respect, but it's also a financial gift. And the purity of gold in the further east you go tends to get better and better. In the West, gold is often jewelry and can be of a substandard quality compared to the East. Of, maybe 9 carat. I've got a 9 carat gold wedding ring, but that's because it's a bit tougher. And I knew that with all us, the running and moving around that I did, particularly as a young man, I knew if I had a pure gold ring, it would be broken and dented. So look out for gold. And also the non-farm payroll data. If that's a big disappointment, then that's going to mean the pressures off the Federal Reserve to taper bond purchases. Now, remember what's going on here with the US dollar is I think markets are expecting the Federal Reserve to taper bond purchases. What's in question now is how fast are they going to do it? So if ADP jobs disappoint, if the ISM data disappoints, if the non-farm payroll disappoints, then we can expect the dollar to weaken and gold to surge higher. That should also help support equities higher as well. Okay. Oh, one other thing, we were talking about the Ftse 100, and I had been pointing out how good value the Ftse 100 was. We looked at a technical setup with this bullish pin bar up into that region, so that has hit its first profit target area, so it is possible to take profit at that level. I'm still long Ftse 100. I'm holding for a bit more, and as long as I stay above this trend line here, then I'm going to stay with it. So stay above, and I'm going to go with the break and looking for a potential move into that 7200 and then get above there. Then it's 7200, looking for a retest of 75. So that's what I'm looking at with the Ftse 100. Okay, folks, whistle stop tour today, and keep an eye on the VIX as well. I can see the VIX rising a little bit higher, and we're seeing a little bit of risk-off trading coming into the market. Very similar to what we've been seeing Monday and Tuesday of this week. Risk-off trading coming into the markets about this time and then fading. Whether we'll see the same again remains to be seen. But I think we're all ready now for the Bank of England tomorrow, 12 o'clock UK time, and we're ready for the non-farm payroll. And the only other thing to watch out is Fed's Clarida. Watch out for Fed's Clarida and to see what take Fed's Clarida takes. If Clarida is more like Waller and starts moving more towards tapering bond purchases, more towards normalization, expect that to boost the US dollar. If Fed's clarity was closer to Powell, more dovish, then expect that to allow the dollar to keep weakening. Fed's clarity is speaking at 3 o'clock UK time, so in 1 hour and 5 minutes time. And the ISM manufacturing data, the ISM services data, I correct myself, is due at the same time. Now remember, with the services data, what is key there is the fact that markets were expecting manufacturing to drop, which it did on Monday, but they're expecting the service sector to stay robust. So if the service sector is also weak, expect that to see some more downside in the US dollar. Folks, apologies for being late today, and thank you for your understanding. Thank you for the kind messages. Thank you, Jabin. Please, if you have any questions, please do ask them now, and we will get through the questions I think we have to ask. A lot to cover this week. So, let's have a look. Okay, guys. A lot of focus on the US dollar this week. That's going to be a main story. And don't forget that New Zealand dollar strength. Start looking for New Zealand dollar strength over today and into the end of this week, and really heading into the RBNZ. So log that, log that of significance. Folks, been a pleasure as always. Thank you all very much. I look forward to being scheduled back here on Monday. Yeah, Oscar. Yes, I'm sorry, Oscar. Oscar, it's support who upload the recorded videos. If you could ask that question to support, Oscar, it would help me significantly. If you just say, please, can you upload the recorded videos sooner? Because that is not my responsibility. My responsibility here is obviously to analyze the market. So I put all my energy and focus into analyzing the markets, and I try to limit doing non-essential tasks to analysis. If you could ask support, Oscar, and send a message direct, that would help tremendously as well. So thank you very much. Yeah, thank you, Warren. Thank you for the kind words. Yeah, a lot going on, so I'm glad that's been helpful. The only other thing I would finally say is, remember, markets are a bit jittery at the moment because we're up at all-time highs in US equity markets. And better value in terms of equity markets is resting in Europe. And I think the Ftse 100 is the best index of value at the moment. And part of the reason for that is just simply because we still haven't filled that COVID-19 induced gap. All the other major indices, we filled that gap. That's, this is the COVID-19 drop. Still haven't filled that gap in the Ftse 100. I think that's screaming out to be filled. And I do like longs back up towards that 7,500 region. Yeah, thank you, Oscar. Thank you, Warren. Take care, everyone now. Goodbye.